For coming out this early. This is Oliver Prock, and he will be speaking to you about driving the value of blockchain. Is that right? Perfect. Well, sounds like an interesting one. So let's give it up for Oliver Prock. Someone hasn't.
Thank you. I guess it's too early. Very good morning to everybody. Thank you for coming. It's a mix-up, right? So it's not deeper radiology. It's Oliver Prock with Smarter Than Crypto. But anyway, appreciate that you're here because it's Sunday, 8:15. So thank you very much for looking at what we have to say. Let me just do a little bit housekeeping. Good morning. What I say is not a public offer, right? So it's not a solicitation to buy or sell a security or a token. It's no investment advice, and it's for educational purpose only, right? So we're in the US, so it's a little bit tough, right? Everything is a security here, so therefore I need to say this to you. Before I start, let me ask you, who thinks the market goes up from here by show of hands? All right, that's awesome. Who thinks the market goes down from here? No, crypto market, of course. We're in the crypto space. All right, so some bearish people here, okay. Who has already invested in ICOs? Okay, great. Who is actively trading cryptos? All right, so also the majority, so that's great. Who thinks 100x is the new normal? 1000%. One more. That's great. Who is the richest man in the world? You? Okay. Let's have a talk later. maybe we should talk, right? Well, maybe Warren Buffett, right? And Warren Buffett, do you know how much he annualized, basically, yield per annum to be the richest man in the world? Something like 22% per annum, right? But for a long time. So obviously, if you analyze 22% per annum, you get the richest man in the world. What happens if you analyze 1,000%? You own the world, right? So I don't think it's going to be the new normal, 1,000%. So something need to be changed here, right? We will see what happens, but obviously that's the forward-looking statement here. My name is Oliver Prock. I'm CEO, CIO of South Alpha Capital. We are a regulated manager out of Europe. I'm based in Liechtenstein. We have a fund structure in Luxembourg. And we have a token as a portfolio coming up, which is called Smarter Than Crypto. I come later to the words, what it means, but just a short statement about, let me move to this side, maybe it's better. A short statement about what it is about. It's an active ETF, right? Exchange traded funds. And in the Smarter Than Beta space, you might not have heard about the Smarter Than Beta space, but I try to explain the terminology here a little bit later. So what do we solve? I think we solve this for you, right? So the hardware wallet, or the wallet issues, right? The hardware wallet issues, and some aspirin. That's typically what you need to buy to to get your crypto trading under control, right? So what is the current market situation, right? It's volatile, right? You're achieving 1,000%. Maybe we should invest with you as well. The selection of a single coin is difficult at the end of the day. It's very difficult. We are coming from a traditional space. We have a track record of 15 years in the managed future space. It's a hedge fund strategy, being quantitative. And I can assure you it's not so easy to get a grip on the crypto market. So it's definitely something where you need to put huge efforts into, especially on the security side and especially on the trading side. So more than 1,500 coins to choose from, that's difficult, right? Every day, obviously, I've heard to the presentations like you did. I think the first day, Tim Draper said financial industry is too expensive and inefficient. I can totally agree. This is actually why we are doing this as well. It's too expensive most of the time, and I will explain you what our solution to the problem is. Not all strategies fit all market phases. It's so funny, when I started out 30 years ago in the financial industry, there was obviously many people went into, a little bit later maybe, into intraday trading, right? It feels like it's the same again with the ICOs, right? So you have this typical technical indicators that work or don't work. Let's put it this way, in the stock market, they don't work, right? It seemed to work here a little bit, but I think the market will get more efficient and then it will fade out and it stop working actually. So I'm not sure about, it feels a little bit like a revival or a rebirth of what happened actually in the traditional markets is now in the crypto market. High volatility, yeah, I mean, that's crazy, right? 200% volatility, I think probably is the lower end of the scale. People try to do leveraged and margin trades. I can understand that, but be careful. I guess it's too much of risk as well. Data is limited here, right? So that's the biggest problem. There's not a lot of history, right? If you go to coinmarket.cap, everybody knows that page, I assume, in that room. It's the reference of where the market is. You can find all the coins, all the cryptos, and you also have the historic data. The issue is, at the end of the day, it's limited. So there's not a lot of information in that data. Us being a quantitative manager, we are lucky that we have a model that can cope with that limited data set actually to trade that cryptos. So even with a broad diversification, the next slide was some kind of highlight for me, or eye-opener, I would say, because I didn't expect the next slide to come out as it did come out, but I'm still showing it because it's some kind of, it's for you trading cryptos, and for you, it's definitely, it's an argument to do it. But from my side, I'm not sure about the data, if it's really, it doesn't feel like that. Let's put it this way. So I'm showing here you a correlation chart of the top 20 market cap coins from October 2017. And basically what you need to know about this chart is, just go for the colors. I'm sure it's too small to read at the back. But the more red it gets, the bigger the correlation is, right? So obviously, the red is Bitcoin versus Bitcoin, it's 1, obviously. And you see the other correlations here. So most of it is deep blue, basically, no correlation. That's actually good news, right? So you should be able to construct a portfolio that is pretty efficient in regards to your diversification. But at the same time, if you look at CoinMarketCap and the market sells off, everything is red, right? If you look at it, everything is red at that day, or everything is green at that day. So I'm not sure what the data is actually telling me here, because, as I said, I thought the chart comes out totally orange or red, but it didn't. And there are some interesting correlations, which is, for example, Ethereum versus Litecoin. Oh, I have a laser pointer here as well. So 0.7, that's a lot. I don't know where that correlation comes from, what the argument for that one is, because Litecoin shouldn't have anything to do with Ethereum, I guess. But on the other side, if you look at Litecoin versus Bitcoin, which I would have thought they are relative some kind of, right? Because it's the blockchain, it's the Bitcoin blockchain. Yeah, 44% only. So I don't know what to do with that chart, to be honest. But it's some kind of eye-opener, so it's actually good news for trading and to construct a portfolio. Let me talk a little bit about, we are called Salus Alpha, right? And Salus means healthy alpha. And just a couple of statements here, what alpha is and what beta is. If you invest in the market, you get the beta of the market, right? If you try to outperform the market, you get alpha, the independent market return. So what we did here is we took the S&P 100, and I'm showing this because you all know the S&P 100. So, and I'm telling you the connection to the crypto as well in a second. So we took the S&P 100 and equal weighted it. So that's the red line here. Okay, and then we split the S&P 100 in 50 stocks, 1 to 50, and 51 to 100. And you see one line is outperforming the benchmark, and one line is not outperforming the benchmark, it's underperforming. And you see basically it's the same difference. There's no fees in this computation, so because if you add fees, it's get worse, definitely. But the core statement here is, if you try to outperform the market, it's a zero-sum game. So basically, one needs to lose, so the other one can outperform the market. That's quite important, right? So if you make 100x, someone else lost that money or that crypto or whatever. And that's quite an important statement, because obviously for most of the people, it's the easiest, you know, Vanguard, right? I mean, Jack Bogle, inventor of the index tracker, right? He basically argues for just buy the index. This one, the red one, right? Even though this one is equal weighted here. The other argument is if you don't want to buy the index, you want to have some outperformance, there's someone on the other side and he's the loser. So at the end of the day, it can be the benchmark can be outperformed through skill, but there's an unskilled investor on the other side who pays you for that. If you add commission, the whole stuff gets worse, right, for the unskilled guy, especially if the commission is a different amount for both. So that's interesting because we're a traditional fund manager, and we're not just going to crypto, actually. We're taking the whole concept, what I just talked about, this outperformance, into the traditional space as well. So we're trying actually to disrupt the traditional ETF market, because I don't agree with the core statement that is basically an index is, and also just the same in the crypto space. Oh, one step back actually. What I just showed you on the alpha side, the outperformance, is the same in the crypto space. It's also a zero-sum game. It doesn't matter what asset it is, right? It's always the same. Someone needs to lose to pay the outperformance to the other one. ETF space, we are trying to disrupt the ETF space. Why and how? Because an index, most of the indexes, I must say, are market capitalization weighted. And a market capitalization weighted index, it's the same in the crypto space, there are a couple of nowadays, has nothing to do with portfolio construction, right? So if you can select from the benchmark more efficient, you should be able to outperform, right? And that's actually what we're trying to do, and we call these models smarter than beta, because we're selecting from the index, weighted differently, and don't charge any fee for that. Because as I told before on the page before, if you add fees, the whole stuff gets worse basically in regards to outperformance versus the benchmark. So we don't charge any fees on the management side. The only thing we do is we charge a fee, a performance fee on the outperformance versus the benchmark. And we try to do that in the traditional space with the S&P 100. We call it then smarter than S&P 100 or smarter than Russell 2000. But we also do that in the crypto space, and that's why we call it smarter than crypto. So there's an idea behind the offer here. And it's the same, it doesn't matter which kind of asset it is, as long as there is an index. So what products do you have currently in the space, right? You have these active, let's start with the passive ETF actually, right? So it's a typical Vanguard index track, or you also have it in the crypto space. There's a couple of them out there. They basically hold the top 20 by market cap, static, and hope to achieve the benchmark performance. There's a couple of statements from Jack Bogle which I love, and well, one is don't buy the the needle in the haystack by the haystack, right? It's basically an argument for the ETF. But I like this one better here, actually. He also said, which nobody talks about, if you cannot imagine 20% loss in stocks, you shouldn't be in stocks, right? But I would say if you cannot imagine a 50% or 80% loss, you shouldn't be in crypto. Because that's actually what happened 2014, right? So you need to prepare for that in your mind. And 100x is good, right? But if you are not able to withstand a 70% drawdown, then probably it's, yeah, you need a wake-up call, maybe. So our solution, the active ETF, is we don't think you should always be in the market, right? I think I'm looking, when I do my research and watch a little bit of YouTube videos and how traders did, basically there's a lot of information out there how traders are successful in the crypto space. And I think the most common mistake I have found was don't trade too often, right? Just buy and hold, don't trade too often, have a portfolio and so on and so forth. But it's not that easy either, because at the end of the day you need to have the right view when to be out of the market and when to be in the market and when you try to increase your exposure. And that's exactly what we are doing, because the model is not, our Smarter Than Peter model is not just selecting from the benchmark, it also says what is the total exposure to the market. And that's actually, you need both components to be a successful investor. So Smarter Than Crypto chooses from the top 20 market cap coins and allocates actively to the top 20. And with the Smarter Than Peter technology we have built over 15 years, and the model is AI supported, and it's all focusing on portfolio construction. So we don't use any of these moving averages, breakouts, Bollinger Bands. I stopped actually using that in 2000 on the futures market because I found out it didn't work. Let's put it this way. If you have a strong uptrend, the most stupid moving average works, right? It doesn't matter what parameter set you have. All of them will work. But if that stops, nothing will work. And that is exactly the problem. So it will be cyclically like in the future space. Every 4 years, your model will break. Maybe in crypto, 4 years is an eternity. So maybe every 1 year, your model will break if the market gets more efficient. So it will not... You will try to optimize your parameters, find new settings, and once you did that, 3 months later, it will break again. So I stopped actually to look at technical indicators in 2000, because at the end of the day, if you construct a portfolio, you should look at the components inside the portfolio, and basically, if you want to have a simple answer to that, it's correlations. It's not what we use, it's more complicated than that. But you should construct a portfolio that is, in regards to correlation, some kind of efficient. And as I said before, we can do that with any index. So we pick from the index and select them, weight them, the components from the index members accordingly, and construct the portfolio so it's efficient on the downside. What I did not mention you yet is the exposure to the entire market is also some kind of, because it's portfolio optimization, is some kind of given, right? Currently in the crypto, we have 20% max weight per coin. And right now it's something like 22% or 20% Neo, 2% VeChain, and 78% Tether. I hope I pronounced that word right, but it's always difficult for me. 5 minutes, thank you. Tether. So we need a stable coin, basically. Obviously, I know all the problems about Tether, and one offspring of the project will be that we have our own stable coin because our strategy needs it, basically. So if you do your own portfolio construction, you also need something to hide, right? And you cannot go towards fiat because that's not practical. So you need, at the end of the day, a stable coin like Tether or something else, and obviously be aware of the problems with stable coins.
So I think it's interesting that you're not focusing on charts and momentum. You started out your discussion talking about Warren Buffett, who
Input is price. We don't care about fundamentals, right? We don't value a coin based on the network effect or something like that. It's just price. We're fully quantitative in regards to price. And we do a portfolio optimization, and the portfolio is constructed that way that the downside is fixed and through portfolio optimization. And if it cannot achieve that solution, it's going to hide towards cash, or in that regards towards theta for the crypto space. And therefore it takes off exposure from the market. And because time is running, I show you one chart, maybe that helps also to your question, to understand the question. We say that smarter than beta can outperform any index by 40% more return, 40% less risk. It's a tough statement, but we did support that statement by saying zero management fee, only a fee on the outperformance versus the benchmark. So there is some credibility behind that statement. And let me show you this chart. I mean, this is the total performance, but let me show you the next one. And I think this is what you want to see. Since December 23rd, the model is basically 78% in tether, so basically out of the market. And it did only find that out by constructing an efficient portfolio and fixing the downside risk. And because it did that, this is what came out, right? It's a very technical question, but maybe we can talk after that session. It's portfolio optimization, and if you don't find a solution for that problem, you calculate a lot of portfolios, and if you don't find a solution to the problem, it basically takes out the coins one after the other till you achieve a precise downside that you are able to do. And I mean, if you look here, it's something like, this is something like, I don't know, minus 15 versus the market is minus 60. So this is really, it's working. And it doesn't matter if if we take the crypto or if we take the S&P 500, it's the same story, it's the same stuff. Because market capitalization in an index has nothing to do with portfolio construction. You need to think about that more and more and more and more. And I realize that's the answer basically. Yes, please. No, it's a token as a portfolio. So basically, you're hiring a manager to allocate inside that smart contract. It's an ERC20 smart contract, which represents an actively managed portfolio. How much are the investment that we have to do? Say again, please. The investment that we have to do, how much is it? Well, there is no minimum basically. It's 0.04 Ether and. It's a ERC20 coin, something like that. So that's our timeline. Sorry? Yes, please.
Coin actually, okay, so I understand that the coin itself is similar to a fund, basically. Does your coin trade?
One legal clarification through that statement. We call it a commingled managed account, right? So the smart contract represents that commingled managed account. And represents the value of the portfolio. The smart contract itself does not trade, right? There is there is a connection. Basically, there's an interface that does the execution and all that stuff automatically.
Okay, but your token itself, you have a token, correct?
Yes.
Is that token tradable?
Yes. The Smarter Than Crypto token is tradable and will be exchange listed. So. Once you have the token, you can basically redeem against the smart contract, against the token, or against another participant on an exchange. So it will be exchange listed, and with one token, you trade the entire portfolio of the underlying coins. And in the ICO process, the receipts, we accept BTC, LTC, and ETH, will buy the underlying coins, basically the underlying portfolio. Yes. Yes, please.
Are those performance results back-tested performance results, or are they forward-tested?
Mixed. Obviously, because the chart goes back till 2014, July, because the benchmark starts there. There is a part that is backtest, must be. We could actually go further back, but the benchmark doesn't. All right. Thank you very much. Oh, shall we take one more?
If it's quick.
Okay, one more. Yes, please. Well, it's actually going on right now. And let me jump to this one here. Maybe you have a look here. And you can also see it up, look it up on the web page.
Perfect. And we can just leave this slide up so that you guys can come up and take pictures if you need to also. So. All right.
Thank you so much. Thank you.
Thank you. Thank you. All right, everyone, give it up for Oliver Prock. If anyone else has any questions, do you have a booth, Oliver? Or? No, I'm not. Oh, you don't? Will you be around today at all? Or? Yes. Okay, awesome. Well, if you have any questions, feel free to speak to him after. In about 10 minutes, we will be having the radiology presentation. And so we're going to get set up right now for that. If y'all just want to go take 5 or 10 or whatever.
Radiology session? Okay, the original 8:15.